What is a financial dashboard? A financial dashboard is an instrument designed to summarize large data. Whenever you have to show your audience a lot of information, you need graphs. But these graphs, most of the times in our career, must be about finance. Therefore, you have to know how to prove, how to show, and how to make your audience understand what is the information you are trying to reveal. Let's take a look at these two. Number one, it's an example of a vertical chart. We have some bars, and the bars show information. Here, we know that the company number one has an amount of 14,964. Number two, number three, four, and five. Thanks to this graph, you may present a comparison between data on a given scale. In the example number two, we have a pie chart. In a pie chart, we have the same amount of information, but in this case, out of the grand total, out of the 100%, it is divided between the several companies. In these charts, you're going to prove a different point. In the example number one, you have information comparing companies. In the example number two, out of the grand total, you are showing the division. First, large data will be collected from various sources. You may have a survey and need to present the results, or perhaps you would like to show historical data to your audience. These are visual aids. These are instruments you can use to show large numbers, help your audience understand, and improve your communication skills. This is another example where you have the comparison of the bars. Let's take a look at the graph and try to understand. Here you have the title Profits 2019, and on the right, Profits 2020. As you see, each color represents a company. Color green is company number one. Color red is company number two. Yellow, number three. Light blue, number four. And light purple, number five. These companies have different amounts of profits. Profits is the amount of money you make after you pay for your expenses. Here you have a comparison between one year compared to the other year. Okay? You have these bars making a comparison. You can show your audience, for example, company number one in 2019, they made 7,000. But in 2020, they made only 6,000. The color not only helps you prove a point, not only visually, your audience can see there is a decrease from here all the way down to here, but also the colors help the company, help your audience identify which company you're talking about. And if you replace this information for names, then it will be more clear. This is a very useful chart whenever you have to use a financial dashboard to prove a point. These are comparison bars. Here you can see comparisons between time or ranges. We are going to take a look at some of the examples of the charts that accounting uses all the time. Okay, let's take a look at this chart that says key financial controlling indicators. Remember, these are just examples. Therefore, this information might or might not be familiar to you at this point. You need to have an open mind and try to understand all the graphs. This is a comparison between money and time. The color green is a turnover. The color red is the amount of money they're using in expenses or money that is being paid, and the light blue is the net income. Here is a comparison between the years and how the composition of the amounts changed from the year 2015, when they only had a turnover. 2016, they had a small comparison, a small proportion of the other amounts. 2017 showed a great amount of expenses and a net income. Finally, they were having some money back. In 2018, unfortunately, they just have expenses. They just expend money. They didn't make anything. So if you're able to explain what the colors are, what the lines are, both vertical and horizontal, people can actually understand better in a picture than in words. This is an example of a cash flow and working capital over the next 3 years. This is a projection. Mhm. Remember, these are all examples, and it might or might not be familiar to you at this point. Here you have on the horizontal chart time: July 2019, January 2020, July 2020, and so on. Okay, this is a projection because it says over the next 3 years. Color red has here the definition. It's the cash flow projection. And color green says here is the working capital requirements. The color green is the amount of money they will need to work. And the color red is the amount of money they expect to make thanks to these green colors. In other words, green is the money you need to start, and red is the money you will create or you will make as a net income. And this is a projection probably based in a lot of information from the company, but you can show the investors, the owners of the company, how do you expect to grow in the next 3 years. Here in this chart, you can identify that after July 2020, the amount of money you will require stays the same. You will always require the same amount of money. And if you go to the left line, you will see it is 0. It means you will be able to work with your own money. You will not require extra money. And the color red, it is growing a little. It might decrease a little bit here and sustain the fall on July 2021. It is expected to grow. Mhm. And as of that time, they just think it is going to continue the same because they cannot calculate after 3 years. Mhm. Now let's take a look at these other graph. It is a cost structure. Remember, all these graphs are examples. It might or might not be familiar to you at this point. The cost structure is the amount of money something costs. If you are a company and you are creating a product, you need to be very specific on how much money you're spending in order to create the product. Here you have the colors. The amount of money you are paying on financial costs will be color black. Financial costs are the amount of money is the amount of money you pay for interest rates on banks, for example. The external costs are the green ones. Here you have the variation throughout the years. You can see in 2018, the external costs were very high. That is the amount of money you had to pay for external reasons. This color is the cost of goods, which is how much money you have to pay your providers. Outsourcing, staff costs, which is probably salaries, and any other costs. Okay? You show this information to your board of directors, your managers, the owners of the company, the investors, and thanks to this information and to the analysis of these graphs, they can make decisions. For example, other costs. You do not have any more information. You just read other costs. Here, here, and here they are very little. But for some reason in 2018 they grow, and in 2019 it is exponentially the largest amount in the graph. So probably the owners will want to know what those other costs are if it consists of the majority of the cost. Okay? Thanks to these graphs and thanks to this information, the owners will make decisions about where to conduct the company. Here is another example of a financial dashboard we will use in accounting. Revenue versus units sold. Revenue is the amount of money you expect to earn, the amount of money you expect to make after you sell something. This color, the darker purple, is the revenue, and the light blue are the units sold. So this is an analysis. On the left, you have money, and on the horizontal line, you have time. So here you see that out of this amount of units sold, you expect to make these earnings. Okay? Why is it always purple smaller than blue, except for this one? Well, you have to sell in order to make money, but you always have to pay salaries and some other costs as we saw on the previous image. So therefore, for example, let's take a look at August. In August, you are selling probably an approximate amount of 8 million units. Okay? Out of those 8 million units, you have to pay some things: electricity, salaries, probably rent. After you pay for those costs, you have some revenue. So that is why the revenue is smaller, because you have to pay. So you take this money, you pay, and then you have your revenue. That is why graphs are so important. It makes people understand things a little better. Look at this other graph. Units sold by age. Here you have a range of ages. From 0 to 18, the composition was larger as male and female. The number of products sold is on the left, on the vertical line, from 0 units to 40,000 units. K stands for thousand. 0, 20,000, and 40,000. Here it is probably 18,000. And out of those 18,000, the people from 0 to 18 years old purchased more male than female buyers, and so on and so forth. This is another chart that helps you understand something. Top 3 product categories by revenue and age. This way, the owners can understand a little better what is it, what products that we are creating are being sold the most, in what age groups. Let's review it again. Top 3 product categories by revenue and age. In this type of graph, you are showing several things. You are showing the age of the people who is purchasing, the products they're purchasing the most. Okay, so here you see how much money on the horizontal lane. You see the revenue, how much money you are getting out of what products in this company. Let's look at the largest bar we have. It goes to 35,000, and we're talking here about money. It says that the people who purchase more products are between the ages of 25 to 45. And the composition of products they purchase are, this color means desktops. Now these colors are the laptops. And these are television sets. Here you have that the company, the owners, the investors may make some decisions regarding this information. For example, probably to invest more in this age range because obviously they're giving more money to the company. Mhm. In what product? Laptops. So laptops probably will be a good strategy to invest when publicity comes. You can invest in publicity designed for people between the ages from 25 to 45, and we're going to make the publicity about laptops because we know this is the star product in the star group that gives us more money. That is why graphs are so important. It conveys a lot of numbers into a information for people to understand and most importantly to make decisions. Here we have an example of something similar to a pie chart is revenue by product category. So here we have that laptops give the company the most amount of money, followed by desktops and then television sets. Here is another example, electronic versus paper payments. And there is a chart that shows the order with the triangle being electronic payments and the circle being paper payments. So you see a fluctuation up and down of these two combinations, and the company may make some decisions regarding that. For example, what happened on March 2019 that increased the electronic payments and decreased the paper payments? And what happened in June 2019 that it was totally the opposite? Paper, it was preferred as to electronic payments. Something happened there. Activity value. This is a simple chart about where is it they get the most money out of. Banknotes takes them more money. ATMs, debt securities, installments, telegraphic transfer, or wire transfer. Assets versus liabilities. Liabilities is responsibilities that the company has. For example, something the company has to pay. And assets is something that already belongs to the company. Okay, so here you see that this company in particular has more assets than liabilities. So it tells you that this company is solid and they don't really owe to the banks. Everything they own it. They don't have to pay it. Graphs give you a lot of information and you just have to be able to have an open mind and try and understand them. Here is the gross profit margin. Here you can see how the profit margin has been fluctuating. There's something going on here. It's not growing. It's actually sometimes decreasing, which is not healthy. And last but not least, we have here a example on how some graphs can also be measured like this, as if it were a speedometer. Days sales outstanding 25. Turnover versus app turnover. And here you have comparison between the charts month after month from 2015 from accounts receivable versus accounts payable. So there is a combination month by month on how much you have to collect versus how much you have to pay. In this example, this particular company is paying a lot of money. Look, the dark green is accounts payable, which is money the company has to pay. And the light green is accounts receivable, which is the amount of money the company is going to collect. Look at this. January 2015, the company was just going to collect this amount of money, but the company had to pay for all this amount of money. So this is not a healthy number over here. They're trying to fix it. If you see, after the months pass, they are trying to fix it up until the point in December 2015 where the accounts payable turnover has decreased and the accounts receivable has increased. But then again, These are just examples. You can get information out of these graphs and you can understand how the company behaves. Days payable outstanding, it's 30. 30 days is the amount of time that the accounts are being paid in average. Okay. Accounts payable versus payment target. And this is the numbers, and they have been decreasing, for example. The ones that are not due are 38,000. The ones that we have to pay in less than 30 days are 29,000. The ones we have to pay in less than 60 days, 18,000. Less than 90 days, 7,000. And for more than 90 days, 5,000. Remember, these are examples of a financial dashboard. The companies have to negotiate. The companies have to be proficient and skillful in how to manage this information and how to negotiate. And most importantly, you have to be able to understand and read financial dashboards. That way, you can not only present your audience with important information, but also you will be able to understand important information. Thank you.